Hello, my name is Dean Rogers, and I'm the Senior Analyst for Case & Company. Over the past few weeks, global headlines have been dominated by the collapse of the Shanghai Index. On June 9, 2015, our company's president, Cynthia Case, had published an article entitled How to Trade the Shanghai Index, in which she identified key resistance and a potential stalling point at 5,200. A few days later, on June 12th, the market stalled at 5178.19. She identified this level using technical analysis. And in this analysis, we're going to talk a little bit about how technical analysis can show us how much lower the Shanghai Index can go before it meets its next potential stalling point. The chart that we're looking at is of the move down from 5178.19. More than likely, this is a large-scale ABC formation. We think, based upon the wave formations and wave projections, that the decline should continue to at least 2,300. Key support was met at 3,000 but has been broken, and the wave projections shown here in blue and in green project to a confluence point at 2,300. This is the 1.00 projection for the wave down from 5178.19 and the extended wave C, or the 2.764 projection. If the Shanghai Index sustains a close below 2,300, the outlook will become much more bearish and a long-term sustained bear market would ensue. At that point, the next targets based upon these current waves would be 2034, 1710, and 1275. Now, with that said, we had mentioned that some key support was met right around the 3,000 level. And so far, even though that level has been taken out on a closing basis, the index hasn't fallen that far below it, and there could still be an upward correction before we see the decline continue. The 3,000 level was important because it was the 62% retracement of the move up from the October 2008 low of 1664.93 to the recent 5178.19 swing high. And it's also, as we show here, a confluent wave projection. If prices do rise in a corrective manner, then we would look at some of the retracements as potential stalling points. The most crucial level right now, at least in the very short run, is right around a confluence point of 3350, and this will adjust as the index continues to fall. But right now, 3350 is the 21% retracement of the move down from 5178.19. It's right around the 38% retracement from 4184.45, and it's also the 38% retracement down from the 4006.34. So this is a confluence area with a plus or minus about 50-point range. A normal correction will hold the 3350 level. If that's overcome, then we're going to be looking for right around 3585, which is near the 62% retracement of the decline from 4006, the 62% retracement from 4184, and the 38% retracement from 5178.19. This is the area that I really feel should hold and must hold if the markets or if the index is going to continue to decline towards the 2,300 level over the next several weeks. A move above this would call for an extended upward correction, at which point, if the index is able to overcome the 4184 swing high, it would negate the down waves that we were looking at earlier and also negate any near-term potential for a decline to 2,300. So for now, look for the market to continue to move down. Look for the Shanghai Index to reach at least 2,300 before a major upward correction takes place. And even then, at 2,300, that's a potential stalling point, a potential bottoming point. But if the market takes out 2,300 on a sustained closing basis, the decline should continue a lot lower. My name is Dean Rogers, and if you have any questions, feel free to contact me at any time.